All right, so I'm going to talk about what you could buy from me today. What's available if you're from a health insurance point of view. So these things I'm going to talk about. Talk about ACA compliant plans. ACA, of course, is the official title of Obamacare, Affordable Care Act, and it's a misnomer because it's not anywhere near affordable, but that's what they call it. I'm going to talk about short-term insurance. I'm going to talk about small group for employers. I'll talk Medicare supplement plans for people that are 65 and older, and some others. Medicare Advantage plans, which is an alternative Medicare supplement. And I'm going to talk about the ancillary plans for individuals and for companies, and that's dental, vision, life insurance, and disability. If anybody has a question at any time, jump in and I'll try to answer it. Okay. Okay. So open enrollment ended. It ended on the 31st of January. This is for individual and family plans. Open enrollment typically runs from somewhere in October to the end of January. And that's when you have to sign up for it, and you can't be turned down. And if you don't get insurance, they're reinstituting the tax penalty if you don't have insurance for at least 3 months. If you go at least 3 months during the year without insurance, health insurance, you could be subject to a penalty. Anyway, because of the coronavirus, they reopened enrollment, and now it's open till the end of this month. So if somebody decided not to get insurance and now they're scared of the coronavirus, they maybe able to get some of that. They have the opportunity to do it. A lot of young people don't get health insurance because they think they're bulletproof. You know, they're young, they're invulnerable, they don't get sick, so they don't need it. Which is really why they put the penalty in place. You really need the young people in the system because they're the ones that help to make it all affordable. If the only people in the system are the people that are ill and taking money out of it, the system collapses. In fact, before, the state of New York had guaranteed issue, which means anybody that wanted it could get it, and but no mandate. You didn't have to get it, but if you wanted it, needed it, you could get it. Their rates were 400% of California's, 4 times our rates. And the reason for that is the only people in the system were the sick people. You know, if you're healthy, you don't get it. When you get sick, you get it because they can't turn you down. As soon as you get healthy again, you drop it. Well, it doesn't take a genius to figure that out. Well, people in Congress can't figure it out, but other people can. Anyway, so they reopened it. And so right now you can get individual insurance. You can actually apply anytime during the year outside of open enrollment if you have a qualifying event. And I'll have a list of qualifying events coming up shortly. And you must apply within 30 or 60 days of your eligibility. And when you can enroll in or out of Covered California. Covered California is the public exchange. And it's the reason you would do that is because depending on your income, you may get a subsidy to help pay for your insurance. The plans that are available in Covered California are also available outside of Covered California. There are actually a few additional plans outside that aren't available in. And the big advantage of going through Covered California is you'll get a subsidy if your income is right, which is now up to 600% of the federal poverty level. But the advantage of enrolling outside Covered California is you don't have to deal with Covered California. Frankly, the application is a real pain in the butt. For one thing, you have to tell them what your income is going to be for this year. Even though it's only now June, you need to tell them how much money you're going to make by the end of this year. And maybe by June you can figure that out, but think about doing that last year. In December, signing up for this year, you need to tell them exactly how much money you're going to make and you have to justify the number. Where does it come from? So if you're a W-2 employee, doing that is easy. If you're self-employed, or you've just started a business. How do you know what your income is going to be and how you justify it? So it's really, it can be painful. One last thing on the subject of individual and family plans. Many brokers have stopped doing this. There are two reasons for that. One, Covered California cut the commissions, not Covered California, the ACA, Obamacare, cut commissions, caused the insurance companies to cut commissions by more than 3/4, more than 75%. So the commission I used to get for an individual plan was actually 20% the first year and 10% in subsequent years. The reason it was more in the first year than the second and subsequent years is because individual and family plans lack what's called persistency. People sign up for it, you go to all that work, and it does take some effort and some time. You get them signed up, and a couple months later they go get a job, and now their employer is going to pay for at least half of it, so they drop the plan you just sold them. So there's no persistency. So you do all that work and you make a commission for 2 months and then they're gone. So what the insurance companies did before ACA was pay twice as much the first year. And if you did have somebody that stayed on the books for more than a year, then your commission was cut in half. Well, now the maximum commission is 5%, and in some cases, it's a few dollars per member per month. And frankly, if you have employees in a storefront, you can't afford to do this stuff. And so a lot of brokers have stopped. There are at least 2 brokers that I know that are sending all of their individual family leads to me because I'm still doing them. And I'm thinking quite seriously, once I have permanently located in Arizona and to do health insurance, I may stop doing individual plans myself. They're just really not worth it. I do it for now, but I may stop. Okay?
Wow.
All right. Here are the eligibility triggers. Incidentally, if anybody wants these slides, I'll be happy to send them to everybody. I don't know why you'd want them, but I can send them. Anyway, so you can see all the triggers: termination of employment, reduction in hours, marriage, divorce, so on and so forth. And the middle column is these are events that trigger COBRA eligibility. Means is extension of the plan you had through your employer. You get the exact same plan that employees have, but you have to pay for all of it yourself plus an administration fee. And then the right-hand column are the events that trigger a special enrollment for Obamacare. So, what is a ACA compliant plan? There are four 10 plans: bronze, silver, gold, and platinum. And each plan must meet certain minimum essential benefits. For instance, I'm sure that Kevin and Doug and Joseph will be happy to know that they have maternity coverage. So if they get pregnant, their pregnancy will be covered. That's because it's a minimum essential benefit. The fact that you don't need it and will never need it is immaterial. It's essential. You have to have it, so you got it. Okay. So there are a number of these things which have to be included to be ACA compliant. And preventive care, and the list of what constitutes preventive care is actually listed by the government, and the insurance companies have to cover all those things. But you can have preventive care with no copay at all. Those are some of the things that are required to be ACA compliant. Okay. A bronze plan has a 60% actuarial value. Silver has a 70% value. Gold is 80. Platinum is 90. What actuarial value means is for the average person across the entire country, everybody that's in the system, if they have a bronze plan, that the average amount of coverage they will get in the case something they need medical attention is 60%. So if they have $100 worth of medical bills, this plan should cover $60 of it. Bronze plan is going to cover 70. Okay, that's actuarial value. Now that's all based on averages. The problem is nobody's average. So let me show you a couple of typical plans. A bronze plan, typically, now remember, it's 60% actuarial value. So a bronze plan has a deductible of $6,300 for doctors and hospitals, and let's say a $500 deductible for drugs. Now, an insurance company couldn't say, well, you know, we're going to drop that deductible from 63 to, let's say, 5,500, and we'll get a lot more clients because people will like the lower deductible. Well, the problem is if you drop it to 5,500, it isn't a 60% plan anymore. Now it's going to cover on average more than 60%, so it would not be compliant. So if you look at plans, they all look quite similar, okay? 0% co-insurance. Well, let me define 4 terms. Deductible is what you pay before the insurance starts. Co-insurance means you pay some and they pay some. Typical plan, look at the silver plan down there. You see a 20% co-insurance. What that means is that once you get into that stage, you pay 20% of the bill and the insurance company pays 80. And then finally, the deductible plus your share of the co-insurance reaches what's called the out-of-pocket maximum, and then your share drops to 0. Now, with a bronze plan, you start at 6,300 anyway, so there's no co-insurance, which means once you spent the 6,300, if you go to a doctor or you go to the hospital, you're now 100% coverage because you met that $6,300 because there's 0 co-insurance. Well, if you're 0 co-insurance, how do you get from 6,300 to 7,800? Well, the answer is you do it with the drugs. You have a $500 deductible, and then you pay a copay on the drugs, and finally you get up to 7,800. And once you've reached that maximum, you're 100% covered for the rest of the year. I tell people if they ever reach their out-of-pocket maximum, it's a good time to go get their hip replaced because it's not going to cost them anything. Now, that's a bronze plan. Silver plan typically has a $4,000 deductible and a $300 drug deductible. And once you've paid the first $4,000, then you pay 20% and they pay 80% until you get to 7,800. And then your share drops to 0 and you're 100% covered until the 1st of January. These plans all reset in the first of the year. Gold plan is better than either of those. You got 0 deductible for doctors and hospitals, 0 deductible for drugs, which means you're immediately covered. And insurance companies are going to start paying immediately. And again, it's 20%. They pay 80 and the out-of-pocket maximum is 7,800. You finally get to the premium plan, which almost nobody buys because they're terribly expensive. You have 0 deductible for anything. You have only 10% co-insurance and your out-of-pocket maximum is $4,500. So once you've spent $4,500 on a platinum plan, you're 100% covered. Okay? Let's try an example. Suppose you incur $6,000 in medical expenses. This is doctors and hospitals, not drugs. In the case of a bronze plan, you had no benefits at all because the deductible wasn't met. So you're going to pay all of the $6,000. So when you think about it, in your $6,000 a year, you didn't get 60% covered. You got 0 covered. That's why I say nobody's average. Okay, the average for a bronze plan is 60%, but for you, with your $6,000, insurance didn't pay for anything because you never met the deductible. Well, let's look at the silver plan with the same $6,000. First, you have to pay the $4,500 deductible, and then they pay 80% of the cost over that. You pay the 20%. That's another $300. So your cost is 48 of the 6,000. So the insurance paid 20%, not 70%. So once again, the 70% plan didn't cover your 70%. Let's get to the gold plan. Remember, gold's expensive, platinum's worse. Insurance pays 90% of all your costs since there's a 0 deductible. And so in the case of the $6,000, your cost is $600. The insurance paid 90%. This is an 80% plan. Okay, but the premium for this plan is going to be a whole lot worse than the silver or the bronze. Everybody following me? Okay. Suppose you incur $100,000 in medical expenses. That would be a burst appendix and 7 days in the hospital. $100,000. With the bronze plan, you're going to pay $7,800 because that was your out-of-pocket maximum. And the insurance company is going to pay the other $92,200. So the insurance has paid 92%, which is way over the 60%. So again, nobody's average. The average is 60%. In the earlier example, they paid none. In this case, the insurance company paid 92%. Let's look at silver. You pay $7,800 as the out-of-pocket, okay? So once again, the insurance company is paid 92%, which is more than the 70%. And in the last one case, you pay again $7,800 for the gold. The insurance paid 92%, not 80. But if you think about it, for $100,000 a year, the bronze plan, which is a whole lot cheaper than the gold, is as good as the gold, right? Because the out-of-pocket maximum is the same on all three levels. So if you have a middling year, clearly the gold plan is best. Silver is better than bronze. Bronze is terrible. But if you have a $100,000 year, your cheapest plan was as good as the other two. Okay?
Yeah.
Okay. Okay, let's talk about short-term insurance. We're not going to talk about this very long because it's not available in California. It's available in the rest of the United States. Our geniuses in Sacramento don't think that short-term insurance is a good thing. Actually, it's a very good thing. It can be up to 12 months in the rest of the United States. It's a temporary plan is what it is. It can be for a specific number of days, or it can be day to day for up to 12 months. You can start it tomorrow. It can be renewed once, everywhere but here. Well, I'm in Arizona. That's available in Arizona. It is not ACA compliant. It doesn't have those minimum essential benefits. It doesn't cover pre-existing. So if you already have a health issue, short-term insurance isn't going to help. But it's better than no insurance at all, and it's a great stopgap coverage while you're in a waiting period. So let's suppose you go to work someplace and the insurance company and the company says, all right, we're going to offer you health insurance until after you've been here 90 days. Well, what do you do for 90 days if you don't already have insurance? Yeah, you can continue your individual plan if you had one, but suppose you didn't have one, or maybe you were on your previous company's group plan. Well, you can go on COBRA, but COBRA is expensive. Remember, there's an administration fee among other things. But if you're in good health and you can pass underwriting, you could get a short-term policy for the 90 days in your waiting period, and it'd be a heck of a lot cheaper than being on COBRA. It's a good thing to have. Unfortunately, in California, you can't have it. I don't know why, but they decided in Sacramento this was not a good thing. Okay, let's talk about small group insurance. How are we doing on time? We're doing great. Small group insurance doesn't have a open enrollment period. It can start anytime. It always starts on the first of the month. But if a company that did not previously offer insurance to their employees decide that they want to do that, they can sign up for it and start on the first of the month. Your group size has to be at least 2 eligible employees and not more than 100. This is small group insurance. Large group insurance is more than 100. Totally different rules. In the case of small group, the premiums are the same regardless of the size of the company. I mean, regardless of who sells it to you. If you buy a small group plan from me, to do some shop comparing, you're wasting your time, because small group insurance is the same regardless of who you buy it from. It is not true for large group. Large group, actually, an agent can give up a piece of his or her commission to try to get the business. And so in the case of large group, you might be able to go to one agent who's willing to give up some of his commission and therefore steal the business. So it's a lot more cutthroat. I don't do large group. I don't want to do large group. I don't want to do cutthroat. If I run into somebody that already has a broker, I ask them, are they happy with the broker? If they are, I say, good, you got a good broker, keep with them. I don't steal business from other brokers. Let's see. I said the group side has 2 to 100 eligible employees. An eligible employee is somebody who is working on average at least 30 hours a week. So if you have a W-2 employee that is working at least 30 hours a week and you offer health that is working at least 30, has to be offered that insurance, okay? Uh, and you must have at least, so for a two-person group, it can't be a husband and wife because you have to have at least one non-spouse W-2 employee. The employer has to pay at least 50% for employees. The employer does not have to pay for dependents. But the employee can pay their share of premiums pre-tax. So if you take an employee has the option of going to an individual plan through Covered California and get a subsidy, says, and so he decides, well, I want to go do that. I don't want to take the plan from my employer. Well, he's paying that premium with after-tax dollars. If he takes the insurance from his employer, the employer is going to be paying at least 50% of it, and he's going to be paying his share pre-tax. Usually, that's a better deal than taking the subsidy. And as a matter of fact, if the employer offers health insurance, then the Covered California won't offer the subsidy anymore. If you're offered health insurance through your employer and you don't take it, the subsidy. A requirement is that at least 70% of your eligible employees must participate. So if you have 10 employees, at least 7 have to participate in the plan, 3 don't have to. Less waivers. What's a waiver? A waiver is somebody that's already on some other group plan or is on Medicare or VA. Typically what we see is on a spouse's group plan. So if you have those 10 employees and it turns out that 2 of them were on their spouse's group plan, their waivers, now you're down to 8. You need at least 70% of the 8. Incidentally, I said that 30 or more hours is an eligible employee. The employer can actually can decide to include part-time employees that are working 20 to 29 hours if he's willing to pay 50% of the premium for those kind of folk. But if you offer it to one part-timer, you got to offer it to all. You can't pick and choose. And for small employers that don't pay their employees a lot of money, this would not be high-tech companies, but maybe a dentist or something, you may qualify for a tax credit. There's a 2-year tax credit that employers can get, which can even help pay for the share of the premium that they're paying for their employees.
Rich, what if one of the employees is the child of the owner?
That's still not a group. So okay. So he's
instead of a spouse.
Yeah, I think that would qualify for a group. I think so. I'd have to double check. I think so, but it can't be a spouse. Back in the old days, before the ACA, we had to go through underwriting for individual plans. Group plans were guaranteed issue, just like these are. And so if I had a husband and wife that one of the spouses had health issues and we couldn't get them qualified for an individual plan, but they had a business, we'd find a way to put the non-working spouse, make it look like they were working, and create a 2-person group where all you had was husband and wife. And I got insurance for folks that otherwise couldn't get insurance back in those days. Now it's all guaranteed issue if you do it at the right time. Okay?
Yep.
All right, let's talk about Medicare supplement. Medicare is available to anybody that's 65 or older, and some people are under 65. If you've been on Social Security disability for at least 24 months, you're eligible for Medicare, even though you haven't turned 65 yet. Medicare is good coverage. The problem is that there are gaps in original Medicare. There are deductibles and there are copays, and if you look at it, it looks to be just about the same as a silver plan, is what original Medicare is. What Medicare supplement insurance does, it can cover some or all of these what are called gaps in Medicare. And it's initially available for anybody turning 65 after signing up for Medicare. It's guaranteed issue for the first 6 months. It's available to anybody 65 or older who loses group insurance, anyone over 65 who has a med sup plan during the month of their birthday, or anyone 65 or older moving into the area. They are guaranteed issue. They can sign up for Medicare Supplement, can't be turned down. Thing about Medicare Supplement is that it's actually cheaper than individual insurance, a lot cheaper for much better coverage. If you're over 65 and your income is less than $85,000 a year, or if your family income, your household income is less than $170,000 a year, then you're into your Medicare Supplement policy, the best policy you can get, which is a G plan, in addition to Medicare, cost of Medicare, and a decent drug plan will cost you somewhere like $300 a month, maybe $350, for a plan that is better than Platinum. It's more than 90% actuarial value. I mean, it's really great. But Congress has made the cost of Medicare on a sliding scale. So if you make more money, you pay more for Medicare. That's why I use the minimum numbers were 85,000 and 170. But there's this chart that shows that as you make more money, the cost of Medicare goes up. But still, $350 for a plan that's better than Platinum. A Platinum plan for somebody that's 64-year-old is going to cost over $2,000 a month. 300's better.
Wow.
300's better. Okay, let's talk about Medicare Advantage. Medicare Advantage is an alternative to Medicare Supplement. Again, available to anybody turning 65, guaranteed issue during a 6-month window. Anyone 65 or older losing group coverage, anyone 65 or older moving into the area. This is cheaper than individual insurance, but not much cheaper. But the coverage isn't necessarily better. I'll take that back. It is cheaper than individual insurance, but the coverage isn't necessarily better. What Medicare Advantage, it's required to be actuarially equivalent to Medicare. So it's not filling the gaps. It's basically an HMO insurance. The best, okay. You go to Kaiser, you still pay co-pays, you still pay deductible, you still have an out-of-pocket maximum, but it's probably the equivalent of a gold plan. The premium is $78 a month. It's a good deal. The Medicare Supplement policy is going to cost you $130, but after a $180 deductible, you have no cost at all. It's 100% coverage, and with Medicare, it's an HMO, so you have to go to network. The Medicare Supplement policy has no network. You can go to any doctor anywhere in the United States who takes Medicare patients, and they all do. So with Medicare Advantage, if you find yourself stuck in Billings, Montana, and you're not feeling well, you better go home to go see your doctor, unless it's an emergency. If you have Medicare Supplement policy and you're in Billings, Montana, you're not feeling well, all you have to do is find any doctor in Billings that takes Medicare patients, and most of them, and use your card and you're done. And as a matter of fact, there'll be, once you've met your $180 deductible, there's no cost at all. Just go see that doctor and it's taken care of. So Medicare Supplement is much better. Medicare Advantage is less expensive. There's an annual enrollment period. It runs from 10/15 to 12/7 every year for a 1/1 start date. So if you have a Medicare Advantage plan and you decide you don't want it anymore, example being Kaiser, you have Kaiser, say, I don't like Kaiser anymore. I'm going to switch to something else. Let's go to Scan or Carefree or one of those. You can do it during that enrollment period. Medicare Supplement is different. If you want to change companies with Medicare Supplement, you have to do it during the month of your birthday. But again, you can do it. Okay? Okay, so ancillary products. I also offer dental insurance and vision insurance and life and disability. Dental insurance is available for individuals or companies, small group, large group. There are lots of carriers. Delta is the most popular. There are PMOs and there are the equivalent of it, HMO, DHMO. DHMOs are very inexpensive, but there are tremendous drawbacks. There are very few doctors that take it because the doctors don't get much reimbursement, and they try to upsell because they got to do something and make enough money to keep the doors open. PPOs like any other. You go to a doctor that's a dentist that's in the network. It's cheaper, but in some cases you can go outside of the network, and coverage is not as good. But you can go to any dentist you want to. There's something about dental insurance. I have individuals ask me about dental insurance all the time, and to be honest with you, I talk most of them out of it. Dental insurance, I talk people out of it. I know that's nuts, but I do it. I explain the economics of it. If you're getting your insurance through your employer is paying for at least half of that dental insurance because they're required by the insurance companies to do that, and you're paying your share pre-tax. So that premium of, let's say, $50 a month, which is what it made 50, 60, what a decent dental program costs. That's really costing you, $600, $700 a year is what it would cost if you did it on an individual basis. But if you do it through your employer, okay, it's only that $500 is $250 a year, and that's pre-tax. So it makes economic sense to get dental insurance through your employer. But if you're doing it as an individual or a family, now you're paying that $600 or $700 a year with after-tax dollars. Now, what do you get for that? Well, you get an exam for free every couple of years. You get a couple of cleanings. What's a cleaning worth? Costs $110 a month, so you get 2 of those. Yeah, you might have a filling. That's another $100. So you're looking at maybe $300 worth of benefit for the $600 you spent with after-tax dollars. Yeah, well, what happens if you need a root canal or you need a crown? Well, that's major work. You got a 12-month waiting period. The insurance company is going to cover half of it, okay? And so let's say every 6-7 years you $100, okay, you're paying half of it, that's $600. Do the math. You're paying $600 a month for something you're probably not going to get $600 worth of use out of. I talk people out of it. There's another big difference between dental insurance and health insurance. I talked about that out-of-pocket maximum. Once you have spent $7,800, your share drops to zero. That's your out-of-pocket maximum. Well, dental insurance also have an out-of-pocket maximum. The problem is it isn't your out-of-pocket, it's their out-of-pocket. Typical dental insurance plan will be a $1,500. Once you get $1,500 worth of benefit out of that plan, they stop covering you until the first of the year. It's their maximum, not yours. So if you needed a lot of dental work done, let's say $5,000 worth of dental work to have your total mouth done, they're going to cover $1,500 of it. They're not going to cover the rest of it. So again, I explain it to people and say, now, do you want it? If you want it after I've explained it, I'll be happy to sell it to you. But frankly, I don't sell a lot of dental insurance except to employers. I'm sorry, it's just the way I am. Vision insurance, there are lots of carriers, but most of them are only for groups. There is some individual dental. There's only 2 carriers I'm aware of that do individual coverage. VSP is the most popular, and they are available both individual and groups. Individual vision insurance isn't very expensive, $10 or $15 a month. I don't talk people out of vision insurance because I think there's benefit and it's not terribly expensive, and I think it's good to have. I also offer life and disability insurance. Is available through many carriers for groups or for individuals. I don't sell a lot of it. One of the reasons that selling insurance appeals to me is that I don't have to be a salesman. There's a built-in urgency. People know they need it. And so if I can explain it to them and find something that's affordable, they're going to buy it. I don't have to talk them into it. Now let's look at Tina. Tina's got to talk people into opening the wallet, right? I don't have to. There's like I say, there's a built-in urgency. Life and disability, the built-in urgency isn't there. I'll give you a quote for life insurance here. Well, I'm not liable to die tomorrow. I'm going to wait until I can afford this. Okay, so you have to be able to close. I don't close. Again, I have no sales background. Prior to getting into this business, I was in software development. I was a VP of engineering for a couple of companies, got laid off in the dot bomb and sort of stumbled into this. And the beauty of it is I don't have to sell. I need to explain and I need to tell people what's available to them, what it's going to cost, and they can decide whether they want it. And in the case of health insurance and dental and vision, they need it. They know they want it. They're going to get it. So I don't have to sell it. Also, I like the idea of residual income. I sell it once, I get paid over and over again. Let's use Tina as an example again. She sells one, she got to go out and find another one. She's not going to get paid again until she sells the second one. Am I right, Tina?
Always.
Okay, but see, I'm not that
It's
way.
painful.
Yeah. And so the beauty of residual income is that if I don't sell anything this month, I'll make the same money next month as I made this month, unless somebody drops off the plan. And of course, things drop off. So my goal every year is to add more than what dropped off. So my income slowly increases every year until finally I decide, all right, that's it. I'm not doing any more new business. I'll just take care of my old business. They'll finally drop off the books, and hopefully that won't happen until after I'm under the sod. I think that's my last slide. Yes, I am. There's my ugly mug.
There you go.
And I think I got done about right on time, didn't I? Any questions?
Good timing.
Any questions? Does anybody understand more about health insurance now than they did before?
Yeah,
That was
Yes.
really good.
it was very good. Well done. I've seen it before, but I still learned something, so that's good.
And it sounds like you're trying to push Tina into it.
I know.
Well,
Hey,
the
that
pro-
residual income sounds very good.
The problem is it starts slow and grows, okay? For me personally, I got laid off from the VP job, okay? I had 6 months severance pay, so I had my entire vice president's salary coming in for 6 months, okay? That helped a lot, because with residual income, it starts really slow. You're gonna need to build your book of business so you get up to the point you're making enough money to live on, and then hopefully it grows from there. So a new agent that doesn't have any other source of income could starve to death the first year, right? Fortunately,
That's just
I
brutal.
didn't have that happen. Stop share. There we go.
Well,
Yeah. And hey, I saw Mike join. Oh, yeah.
There he
Hey,
is.
Mike. So you
Yeah.
missed everybody talking about what we were doing. So what are you doing?
You're still
Jason.
muted.
Chasing bees.
You're muted, Mike.
Yeah, you're muted. We can't hear you.
Oh,
I'm pretty good at reading lips, though. I'm pretty sure you said that you're going on vacation to the
Here,
Bahamas.
let's try this one. Yay!
there you go.
I like
Sun
it
my
better.
eyes.
I like it better the other way, Mike. Turn it back off.
Yeah, I know. You know, I'm sorry. I'm sorry to offend your ears, Rich. Yep. But good information always. You know, I hear you speak. You know, usually 2-3 times a year, and I still pick up little bits. You know, a lot of it's what I've forgotten over the past. But yeah, no, we're busy. Farmers markets have opened back up, so
Oh, beautiful.
we're doing 3 of them this week. You know, each week we'll probably start adding another one, but yeah, so busy.
You didn't force social distancing on your bees, I assume.
They don't listen to me too well on that one. Yeah. They have their own social distancing protocol. Everybody stays far away from them. Yeah.
Right. That's right.
Okay, well, we have about 6 minutes left until the official end of the meeting. Is there anything anyone else would like to say? And do we have any referrals to Rich based on the presentation?
So I want to say that from my perspective, most of the people that I work with tend to have many of the insurance. I mean, we may review on some of the property and casualty insurances, but the one thing that I end up trying to convince people to do is disability insurance. So in this particular instance, I'm usually the one who's trying to convince clients that they need to get disability insurance because many have life insurance, but they don't have disability. And the chances of them dying straight out versus being disabled is lower. So they really do need disability insurance, especially when they're younger and they have younger kids. And so I'll just kind of leave it there and then say that I'll reach out to you later to get more.
I also have a
information on-
disability presentation, so next time it's my turn to talk, I'll talk on disability, okay?
Okay.
Perfect.
So I
let me-
actually have a question, Rich, about sending people to you that, because I have some friends who are getting close to Medicare age and I'm trying to send them to you.
Mhm.
And I was just wondering, like, how does that work for you?
I explain Medicare to them, depending on when it is. I do Medicare seminars occasionally, okay?
Right.
When enough people want it, and I do it through financial advisors. I've done a couple of them with Michael's significant other, but I've done several of them for
Edward Jones.
Edward Jones, thank you. In Santa Clara, I've done
You
at least
knew.
half a dozen for the Santa Clara guy. I've done 3 or 4 of them for the guy in Willow Glen. They assemble some folks that need to learn about Medicare, and so we invite their people. I invite mine, and we hold these things. So, what anybody about to turn 65 is going to find out is that 6 months before you turn 65, you better get a bigger mailbox, because you're going to have so much stuff in the mail for people trying to sell you, and you'll get a booklet from the government explaining all about Medicare, which is so useful.